Welcome back. Now, in this episode, I'm going to answer the question, how to buy tax certificates. This is going to be fun. It's going to be lucrative. You're going to like what you're going to hear. My name is Ted Thomas. I've been involved in tax lien certificates and tax deeds for 30 years. Now, I started out my first 5 years just buying tax certificates, then buying tax deeds. So I learned how to do it. Then I became a guide. Then I became a coach and a mentor. Then I created distance learning material. I've been doing this for the past 30 years. You're about to be surprised. So we're going to talk about tax lien certificates, and I'm going to teach you how to buy them, and I'll give you a step-by-step process before I finish this video. So stay tuned because this is going to go quite quickly. So in this episode, I'm going to show you how to take a $2,000 investment, buy tax lien certificates in Arizona, earn 16%, and then every year just do it again and again, except we're not going to buy it. We're just going to take that certificate and we're going to roll it over, and we're going to keep reinvesting it, and you're going to end up with $30,000. So this is quite something to see. So let's look at the numbers. I'm putting right on your screen. If you invest $2,000 in an Arizona tax certificate and you earn the maximum rate, you'd earn 16%. Now keep in mind, the banks are paying like 1%. All right, so your first year profit would be about $320. So if we take the $2,000 and the $320 and we invest that at 16%, and we do it again and again, every time we have a profit, we just roll it over into the next year. If you do that for 30 years, use $2,000 where you started, will end up as $30,000. Now, how does that compare with your bank? Well, there is no comparison. This is real money. And if you did that in an IRA account, whether it be a traditional or a Roth IRA, you wouldn't have to pay taxes on all of that growth. So you can understand why tax liens and tax lien certificates are very, very popular. And they're a safe investment. Now, if you buy tax lien certificates, you can't invest with Ted Thomas. I'm a teacher. I'll teach you how. You're going to invest directly with the government, and you're going to get checks back from the government. Again, this is a safe, secure investment. If you have an IRA account or a 401k or your pension plan, well, you'll want to really investigate this because those entities can grow with no taxes taken out of your investment. A small investment of $2,000 ends up at $30,000. What if you did that every year? You'd have a lot of money after 20 years. Okay, so tax liens are issued by a local government. Why are they issued? They're issued because someone did not pay their taxes. Now, what does that mean? Well, let's go through the whole process here. You see, there's over 3,000 counties in the United States. All of those counties have taxing authority. Now, where do they get that taxing authority? They basically get that taxing authority from the legislature of the state. The state says all properties will pay taxes. Okay, so the state doesn't collect that tax. The local county does. But the rules are made at the state legislature. So the legislature tells the county what to do. All right, so they'll tell the treasurer and the tax collector and the assessor, look, you have to levy taxes, collect taxes, and if you can't collect taxes, in half of the states, they'll issue a tax lien certificate. Now, when they issue that certificate, the property owner stays in the property. So everybody benefits with this investment. You'll benefit when you buy it because you'll make 16%, 18, 24, or 36%. And the property owner benefits because they stay on the property. And the final beneficiary will be the county. So there's 3 beneficiaries to this investment. This is a good investment, and it's good for everybody. Remember, it's predictable, it's certain, and it's secure. You're going to invest with the county government, you're going to get a check back from them. All right, with this investment, if you don't get paid on the tax certificate, you get the property without a mortgage. Let me say that again. You get the property without a mortgage. I don't make the rules. The legislature makes the rules. So if property taxes are not collected, the treasurer, working with the tax collector and the assessor, they will confiscate the property and resell it, or in the benevolent states, they sell a tax lien certificate. So that's what we're learning today, how to buy a tax lien certificate. You're going to buy that in your local market. Local market. They're always sold at the county level. Will there be enough for you and will there be some for you? Well, I'm here to tell you there's 3,000 counties in the United States. You're looking at a map that shows all 3,000 counties. They're all authorized to have a tax defaulted auction for tax lien certificates. There'll be plenty. And I'm going to show you how many tax liens are really available. It says notice of tax sale, okay? This is just a small sale in Fort Lauderdale, Florida. It's not a sale of land, it's a sale of tax certificates. And guess what? There's over 30,000 certificates on this list. Now wait till I open it all the way up and then you'll see it. All right, now you're seeing the top of the list, and now you'll get to see the rest of it. It's just like a regular newspaper, same size. Let me go all the way down to the end. All right, so you're getting the idea. So those tax auctions are taking place in every county in the United States. This one happens to be Hillsborough County, that's Tampa, Florida. Okay, anybody can go to these auctions and buy tax lien certificates, all 3,000 counties. So what am I talking about here? We're talking about a tax lien certificate. And when you want to buy one, you're going to buy it from the county. You'll raise your hand, pick any one you want, and the property owner will stay on the property. You will not get the property. The property owner is not evicted from the property. You're going to get a certificate, and that's all you're going to get, and you just hold that certificate. However, you have rights in that property. You have right to get paid at the high interest rate, which could be 16, 18, 24, all the way up to 36%. Anybody can buy these certificates. You can buy them for $50, you can buy them for $500, you can buy them for $5,000. All right, the property owner is in default. It's published in the newspaper, it's published on the county website, and now you own the certificate. You're going to buy that directly from the county. So let's take a look at that. On the top of the slide, you can see school children. You can see the roads being built. You can see the police, and you can see the fire department. All those things are paid for with tax certificates. The money that comes in is used to pay those services. So if a property owner is in default, I can assure you the county's going to take them to task right away, because this is how the county employees get paid. So slide on the left, government sells the tax certificate. Number two, they sell it to the lowest bidder. So you want to have a bidding plan on how you're going to do it. That creates the revenue to pay all the county's bills. Everything I'm telling you has been going on for no less than 200 years, depending upon what you're doing. All right, so the revenue is used to pay all of the county's bills. Now, in the counties that don't sell tax certificates, they confiscate the property. They seize the property. And when they've seized the property, what are they going to do with it? They're just going to auction it, and they're going to auction it for back taxes. Now, that's not a tax certificate. That's a tax deed auction. That means you're going to get a property. So tax deed auctions start at the back taxes, and they sell for whatever they can get at the auction. They're sold to the highest bidder at the auction. All right, that's a lot different than a tax lien. A tax lien is a very benevolent state. It's a lenient state, and they're not kicking people out of property. So tax lien certificates are predictable, they're certain, and they're secure. All right, now different states will have different amounts on the tax certificate. All right, Arizona pays up to 16%. Florida pays up to 18%. Iowa pays 24% to everybody. Illinois pays up to 36%. In Georgia, everybody gets at least 20%. So each state has its own rules. So you'll have to learn the rules of the different auctions. You don't want to wing it and hope you're doing the right thing. This is not the place to play. This is serious business. And when you buy a certificate, take my word for it. They're going to take your money and they're going to keep it. This is a proven and tested system. It's 200 years old. So I'm going to go through the process of buying a certificate now. And if you want, and you're going to do this, you can go back through it again. But you can always view these properties physically before you buy them. It's always going to be an auction sale. So start out and choose the county where you want to buy. Next, you want to figure out what your budget is. After that, you want to review the announcement. Those are going to be announcements in the newspaper like I showed you, and they're also going to be online so you can find the property. All right, research and check the property. Every property has an ID. Just like you have a social number, well, this property has a social number. And so you can look it up by the ID. You can bid online or offline. I suggest you go and watch before you ever do it, not do anything until you know what you're doing. And the last step is to tell you 97% of these certificates are going to pay you back your money. In other words, you raise your hand and you buy a certificate. You'll take it home if you go to the auction, or they'll send it to you online. All right, you will get paid. If you don't get paid, you get the property without a mortgage. All right, now I'm going to close with 2 questions, and that'll be all for today. Depends upon where you are. I would suggest you start out with whatever's happening in your state. If they're having tax lien auctions, go there. If they're having tax deed auctions, go and watch those. It would depend upon what state you're in. That would be the best place to start. They don't pay, you should pay it. So when you go to buy a tax certificate, they'll say this is a 2-year certificate or a 3-year. And they'll ask you, do you want to pay next year's? Absolutely. When you buy one, buy next year right now, because if they pay you, they're going to have to pay you that high interest rate on both investments that you made. So buy both of those. Okay, remember below me, there's a free course for you and a gift. And also remember the 2 things that you have to be careful of at auction. Big mistake number 1 is people show up at the auction, they start bidding, raising their hand, they're bidding. They've never looked at the property. What if there was a fire? What if there was a flood? What if the building had some kind of crisis happen, like a windstorm, and blew all the windows out? I don't know what could have happened, but when you buy at an auction, the sale is final. So you want to make sure that you've looked at the property. Second big problem people have at auction is another bad one, and this one is much the same. People bid, and they don't know what the selling price is. So you don't want to bid on any property until you know the price you can sell it for. So if you know the exit strategy, go ahead and bid. That'll keep you from bidding too high. Some people just keep bidding and they go right past the price. So you could overpay for the property. They're going to take your money, I can assure you of that. So I'm Ted Thomas.